Welcome to Holistic Accountant Podcast, where we aim to showcase how adopting a holistic approach in accounting and tax maximizes value for clients. Beyond traditional tasks like preparing financial statements and tax returns, a holistic accountant focuses on offering advice that maximizes personal wealth on an after-tax basis. If you enjoy this episode, please consider leaving a rating and sharing it with those who might also benefit. And to ensure you stay updated, subscribe to our weekly email. The link is in the show notes. Okay, today, Mena, I would like to talk about the synergy effect, which is really about how can you grow or expand your business and achieve some synergies either internally, within your current sort of business structure and approach, or by expanding your business either vertically in your industry or horizontally into other industries and really extract value. Now, it's a great concept for people studying MBA to sort of pull apart and discuss and so forth, but really in the SME market, it can be more challenging from a practical perspective, but there are opportunities there. We just need to be realistic about what is achievable. And just because you can expand or you can expand vertically or horizontally doesn't necessarily mean you should either. So let's start with defining really what we're talking about, Mena.
All right, so what is synergy? And it's a term that's really sort of thrown about a lot and, it makes a lot of bigger corporates feel good about themselves. But what synergy really is, it's the combined effort of people or teams or even companies that create a larger result or a better result than the sum of its individual parts. It's sort of like when the moment when everything sort of just clicks. And then there's vertical integration, right? That's when a business sort of controls multiple parts of its supply chain. Sort of like, think about, not that I recommend this actually, but like a coffee company that owns its farms, roasts its own beans, and then runs its own cafes. So it's about creating control, consistency, and efficiency for your consumer. So synergy is about the collaboration piece, and vertical integration is about the control. But when you sort of combine both, that's when you get something that's relatively pretty powerful if done correctly, and a business that's sort of efficient internally and resilient externally.
So synergies really begins with leadership and strategy. You've got to build your strategy out to sort of work out where the synergistic benefits might exist. And then from a leadership perspective, it's really about identifying them and executing on them. Now, you can, as I said at the beginning, achieve synergistic benefits inside your business. And this is where, that I think there's a low-hanging fruit in a lot of businesses where business units aren't necessarily working harmoniously together. Sometimes they actually end up creating work for each other just because they feel like, well, this is not my job. This is another department's job, instead of just really being on one complete team. And it's something that Richard Branson talks about, in his work around businesses, about keeping businesses small and keeping teams smaller just because they're easier to manage and it builds that sort of team environment. So that's something to think about from a leadership perspective. Can you sort of break down silos internally in your business and achieve some synergistic benefits that way? Externally, it's really about thinking about partnerships and relationships beyond your business. So again, you might still be able to work synergistically with a supplier or a customer without necessarily, combining businesses. You might be able to achieve some benefits that way. It's really looking for a win-win situation and really reducing internal friction between different businesses or different departments.
So let's talk about the control aspect, which is the vertical integration. Now, again, you've got two types of vertical integration. You've got backward integration, where that sort of controls your supply chain and your production. And you've got forward integration, where you control how your products reach your consumer. So think about the Tesla example. Tesla, basically, they design their cars, they manufacture them and sell them directly to the consumer. There's no middlemen. There's total control of the customer experience. So any issues within the supply chain can be dealt with internally, and you can basically deal with your clients directly. But it's not always easy. Vertical integration sort of requires a lot of investment, as we all know how much Elon Musk sort of funded Tesla in its early stages and so forth, and it requires good strategy and timing. So the goal isn't just control, it's ideally to create a smoother, sort of more efficient value chain for your consumer.
Vertical integration is one thing, but without synergy, it's another. I mean, vertical integration is really about the doing, if you like. Synergy is really about the bringing it all together. And so there's sort of two different concepts, if you like. And that's why, if you go and buy a business or start a business up or downstream, it's not just about doing that and you think magically you click your fingers and it's done. It's a little bit like strategy and culture. Strategy is one thing. I can come up with a business strategy, a business model, all those sorts of things, and go away and execute it. But if I then also at the same time sort of focus on building a fantastic culture in that business, that sort of supercharges or magnifies the benefit of a good strategy. And it's the same with vertical integration. It's not just enough to go and do it. You've really got to come to it or attack it really with an idea of achieving those synergies. And you've got to then think about the human aspects. If you've got teams working together, how are they going to work together? Are there sort of cultural differences? Can you make sure that they're on the same page? Because the actual mechanics of that vertical or upstream or downstream integration isn't that difficult, I guess. It's just another business and we've all done that before. But getting them to work harmoniously and efficiently together is the execution piece that's really the leadership piece, if you like.
So, like I said before, these are usually sort of big words that are sort of likened to larger corporates. So, I just want to sort of make you think about it from a small or mid sized business. So, how do you sort of achieve synergy? And I think the first step is to really sort of start mapping out your value chain, from idea to delivery. Then look for certain overlaps or breakdowns or communication gaps within that value chain, because most opportunities are hidden within them. Like Stuart mentioned before, it's usually the low hanging fruit. And the integration doesn't always mean an acquisition. It could just be a smarter collaboration. The skill set could actually be within your business already. It's about nurturing it and getting it to fruition. And then you'd create a shared KPI sort of framework so that every team knows and works towards the same goal. Encourage cross-functional meetings, use unified dashboards so everyone's on the same data, and celebrate the wins, not just individual ones. And it's something that we've been able to do here at ProSolution. We've broken down the silos between sort of financial planning, accounting and tax, and credit and insurance because of that collaboration piece. We've mapped out our value chain. We've worked with our staff to basically not be so siloed and just think about one element of a client's wealth perspective, such as tax. No, we're actually trying to help them achieve build their overall wealth. And how do we do that? By incorporating the other service lines. So it's about breaking down the us versus them mentality in business. So it's synergy is as much about the people as it is about the process. You need to trust your people. You need to be open with them, and you need to be very selective with the people in that process.
So let's talk about what can go wrong, Mina, because it's good to start with maybe not a positive mindset. We always want to have a positive mindset, but good to start it with thinking about all the things that can go wrong. Well, of course, if we build up or downstream, we're really changing our business, and sometimes that can reduce our flexibility as a business. One of the things that SMEs have to their advantage is they're small and agile, and they really should play to that advantage compared to very large multinational businesses. They're very slow to be able to react to things. So the question then is, does vertical or horizontal integration, does that, reduce your business's flexibility? And it's not always that 1 + 1 = 2. You really want 1 + 1 to equal 3. And the way that it's going to do that is it's either going to be improve your return on capital. So in terms of profitability, cash flow, return on assets, these sorts of financial metrics, or it's going to reduce your business risk. So sometimes by, going up or downstream, you can, have a direct relationship with your customers, or you can control the supply chain better. These sorts of things, not only should it then give you a good return on investment, but if it's doing that as well as reducing the business risk within your existing business, then in that situation, 1 + 1 can actually equal 3. And that's where you really want it to go. Otherwise, what you might end up doing is actually increasing your business risk. And if your execution in terms of the failed synergistic benefits isn't fantastic, you may actually end up reducing your profitability, and 1 + 1 might still only equal 1, which is the situation where you want to avoid. Anyway, let's get into some real life examples, Mina. Let's start with some good news stories.
Yeah, and I think Apple is really one of the good classic examples. They've got synergy between their hardware, software, and retail, and everything feels connected. From when you go into the store, the Apple store, they've got their own way of marketing their products, and everything's connected from your iPhone to your MacBook to your Apple TV and so forth. It's all the user experience. They've controlled that whole process, and no matter what product failures there are, you always go back to the Apple store and it's promptly dealt with. Netflix as well is another company that's sort of integrated very well. They went from basically distributing films or streaming their products to creating their own. So basically they've vertically integrated and they've got control over the whole sort of production and viewership.
And let's talk about some more negative stories. I saw the other day that AGL, the electricity supplier, was selling add-on Netflix subscriptions. So, if you spend a certain amount on AGL, you'd get a cheaper Netflix subscription. Now, I don't know where the synergistic benefits are there. That feels like to me that someone has a customer base and lazily thinking, how else can we squeeze a little bit more revenue off this customer base? Or maybe it's about creating more sticky customers. I'm not really sure. But to me, that seems like failed execution. I don't see where there's going to be a lot of synergistic benefits. I think it's just going to end up being a bit of a distraction for them, and it sort of cheapens the whole value proposition, if you like. I think they're probably just better off to focus on, delivering electricity to customers in a cheaper or more effective way. I'm not really sure, but that's an example that, a recent example I came across. I was sort of shaking my head, where is the value here? Another example, and you see it in financial services and property and law. So you see buyers agents businesses and they expand into mortgage broking, and they go and hire some mortgage brokers and try and do the finance. Or you see mortgage brokers expand into conveyancing, because it's natural that, of course, with the transaction of buying a property, you need, some people need a buyer's agent, everyone needs a conveyancer, everyone needs a bank in terms of mortgage. And so it's natural for people to start thinking about synergistically, well, maybe there's some value in combining all these businesses. But over the last 20 years, I haven't really seen one work. And so you've got to ask yourself, why doesn't it work? Because it kind of makes sense that if, I come to you as a buyer's agent to go and buy a property, you can say, hey, I'm going to do your legal work and arrange a mortgage as well. I think the answer is there is just no synergies. There are no synergies between three different businesses that are completely three different industries. And so that's one thing for, I think, small business owners start really thinking about, what is my core competency here? So, for example, our core competency within ProSolution is really understanding a client's financial position and helping them with their financial decision making. And that sort of process or approach can be used in mortgage broking, it can be used in sort of tax planning, it could be used in financial planning. It's the same sort of mentality, approach, training, all those sorts of things. There's synergy there. But we've never added, even though it kind of made sense in some way in the past, we've never added, for example, doing conveyancing work, which wouldn't be that difficult to do for us, but we've never done it because there's no real synergies there. We don't really understand the legal business and we shouldn't get in there. And even if we did and it added incremental profit, does it really change our business, or does it actually reduce our flexibility? Because we like the flexibility of referring that work off to whoever we think is the most appropriate person in the state that client is buying property. So there's just a couple of examples of how we can sort of think about synergistic benefits. And I think it's a great opportunity, if you run your own business, after listening to this episode, sitting down and really thinking about, is there a way that I can reduce my business risk or expand upon the core competencies within my business to either reduce my existing business's risk or increase the financial footprint of our business? Okay, that's it for this week. Until next week, bye for now.